Hey everybody, Jeff Bangerter back with you talking about 1031 exchanges using a Delaware Statutory Trust as the replacement property. And today I want to talk about some of the fees and expenses. You know, I have a lot of people, that's obviously a common question people ask, how do I get paid? What are the additional fees? What's going on here, right? So when you get the PPM or you talk to us and we talk about a property that says, I'm going to just use 5% for easy math here, right? If you ask and we say, hey, we have a property and it's paying a distribution rate of 5%, that's a net number to you. So if you invest $1 million, it's $50,000 a year net, right? There are no other issues or questions or anything. Inside, there's more going on, right? So the way that the companies pay me, the way that they pay the attorneys, the way that they pay to get the financing, all of the stuff that has to go on to get it into that thick private placement memorandum, right? The 1-inch thick document that we have to give you, right? All of that is built in up front. So let me explain that a little bit. Let's say it's a $100 million purchase. They go out and they buy this big, beautiful building for $100 million, and then they're going to do all of that. They have to finance it, they have to get it appraised, they have to market it, they have to work with advisors like me, my broker dealer has to do due diligence. All of that stuff has to get paid for, right? There's no free lunch anywhere, right? So how does that happen? Well, what they do is they package all of that into the price when they offer it back to the public. And it's generally, I'm going to just call it 10%. It can be more a little bit, it can be less a little bit. But generally, 9 or 10% is pretty common. And that's total. That covers everything to get you into it. And so I'm going to just use 10%. So 100 million, you add the extra 10% on that, right? So you've got this $110 million purchase price for the investors. So your return is still, if you put $1 million in and it's doing a 5% net cash on cash distribution, you're getting $50,000 a year. They could do the math the other way. They could say, hey, it's 9% minus this, minus this, minus this, minus this, and you get 5. And they do the math in the private placement memorandum. It shows you all of this, right? So it's in there, but just to simplify it, if you just think that 10% is that all the real estate fees, all the financing fees, every fee that you can think of is in there, and they just increase the price to cover all those fees. But when they go to sell it, they know that the sales price for the purchasers was $110 million. They've got to sell it for the $110 million to get you back all of your money. So that's the objective. Now, obviously, they shoot for higher numbers than that so that you can get some capital appreciation on top of it. And so they're managing it with that expectation and that reality. Along the way, are they getting paid? Yes. Internally, there is an asset management fee that goes to the sponsor company to manage the asset, but there's also property management fees. They will either create their own management company or they'll hire a third-party professional real estate on-site management team. You think about apartments, right? You'd actually have somebody living there and managing the day-to-day. So all of those things are built into that net rate of return, that net distribution that you're getting. So it's already been factored out. It's never 5% minus something, right? And again, I don't want you to get stuck on 5%. Whatever the distribution rate is, maybe it's 4.5, maybe it's 6.5, right? Each one's different. In today's world, as I'm doing this late 2019, kind of 4.5 to high 6. I have one that's 6.8 right now. So that's kind of the range. But I want you to know, whatever number we talk about, that's a net distribution rate to you. All the stuff that's internally has already been calculated into that net distribution rate. So yes, there are fees. Nobody's working for free, but it's already factored in, right? So you don't really have to worry too much about that. And I think that that's important because, like I said, I get a lot of people that actually just recently, last week, we have some folks that are selling it. It's about $1.2 million complex, and I think they were a little surprised that we're not charging some additional fee to get them into the DST. And that's just how they're built. The sponsor company has already built it into the price. They're paying out a fee to my broker dealer. My broker dealer is paying some of that to me. Everybody is taken care of when you purchase it. You don't have to worry about any additional fees along the way. So hopefully that helps. If you have any questions, again, give us a call, 800-451-2351. Make sure you've got a copy of my book. Are you tired of tenants, toilets, and trash? Be happy to chat with you anytime about it. Visit our website at bangerterfinancial.com. And again, as long as you're an accredited investor, we can give you access to all the current offerings. So with that, thanks for watching.